D'Souza. Well, things were looking good for the Nifty just a short while back, and we're still holding in the green, holding towards the 10,600 odd mark. But in the last 20 minutes or so, there is some profit booking that's crept in there. So the Nifty has come down to around the 10,600 mark. We've gone to around 10,630 approximately. The Nifty Bank, that's the problem point today. That's moved into the red as we speak, doing a relative underperformance in today's trading session. The Nifty Bank should come up for you on the screen. But let's get straight to the big boy. Reliance Industries is in focus today. Jio has signed yet another deal. Intel will be investing roughly around 1,900 crore rupees for their stake in Reliance Jio. Remember, this is the 12th investment in Reliance Jio platforms in just 11 weeks. Rima joins us to run us through all those details. Rima?
In what marks the 12th investment in Jio platforms in the last 11 weeks, Intel has announced that they will be investing nearly 1,900 crore rupees, so that's roughly $250 million, for a 0.39% stake in Jio platforms. With this, Jio platforms has raised a whopping 1.17 lakh crore and they've sold a total stake of 25.1%. The valuations are same as the last round. So we're talking about an equity valuation of 4.91 lakh crore and an enterprise valuation of 5.16 lakh crore. The key is that now the investor base is getting pretty diversified. So you not just have a tech investor like a Facebook, but Intel, remember, is a US semiconductor giant. It's a telecom company with clients like HP, Dell, Lenovo. So now the client base is also getting pretty diversified. It's very early to talk about the collaboration between Intel as well as Jio, but it's a very marquee brand name. Separately, as you pointed out, Reliance Jio has also launched a high-definition video conferencing app called JioMeet, which will be a competitor to the likes of Zoom or Microsoft Teams. Some of the features, they will allow a video call for up to 100 participants, and it will be free for a period of 24 hours, which is where it differs from the likes of Zoom, because Zoom gives you a free call for only about 45 minutes. As of now, no prepaid plans have been announced, so it is free, but that is something that we will wait and watch. But the big development, of course, is another investment in Jio platforms. Intel investing 1,900 crore rupees for 0.39% stake in Jio platforms.
They bring their typical influence. I think there has to be some joint development program for which I think companies like Intel is basically roped in as investors. And joint development program could be along with the OS and the devices, where I think the chips of Intel probably would make more sense. So that could be, I think, one of the possibilities which one cannot rule it out. And I think that's a positive thing, according to me. In fact, I think as we see the progress of the deals that Jio has been making all along, I think they've been selectively inviting investors, strategic investors, the sovereign investors, the financial investors, with an outlook between 7 years to 25 to 40 years. I think that is where I think they are making the best of the choice as far as the investors are concerned.
I don't know how far it will be correct to call it as a strategic investment, but I agree that it could be called as a quasi-strategic investment, because 0.4% cannot really be taken as a strategic investment. But if you take a call, Intel having invested a $250 billion company mainly into the chips, and they've always all along been investing into the hardware. So one thing is very clear in respect to Jio platform, that they will not going to be buying any kind of Chinese equipment. In fact, they have never bought any kind of Chinese equipment. In future also, they will not be buying any kind of Chinese equipment, with the Intel having come in in the company for 0.4% stake. But if the two things which gives a little hint or maybe clear cut, I would say, guideline. One is of the 5G foray of Jio platform, and second is of the IoT, Internet of Things.
Well, let's focus on Motherson Sumi. The stock is under some pressure after analysts expressed concerns of the likely valuation of the promoter business in the scheme of arrangement. Sonia joins us to fill us in with all those details and all the analysis as well. Sonia?
Well, thanks for that. First, for the benefit of our viewers, let me explain the reorganization plan that Motherson Sumi has come out with. What they've decided to do is de-merge their domestic wiring harness business into a separate company, which will eventually be listed. This de-merged entity will be the largest listed automotive wiring harness player in India. And if you own one share of Motherson Sumi, you will get one share of the new de-merged entity as well. The second part of the reorganization is that the promoter holding company, Samvardhan Motherson, will be merged into Motherson Sumi Systems Limited, and this merger will be EPS accretive in the first year itself, that is in FY22. Now, why are they doing this merger? Because they want to create one entity having diversified product portfolio. The other benefits of this reorganization, of course, will be simplifying the group structure. All auto-related businesses will now be under listed entities, and Motherson Sumi shareholders will now have 100% stake in SMR PBV, which is the main cash cow. But the stock is under pressure today because there are some concerns that shareholders have. One is that the valuation approach by the bankers looks more designed to suit the company rather than independently achieved. Two, the valuations are more in favor of Samvardhan Motherson, which is majority owned by promoters. So it seems like it's a pick and choose approach of using the peak profitable year, which is FY19, to value the company rather than FY20, in which there was a lot of damage. The consolidated entity will be majority owned by the promoter group at 50%. So shareholders are feeling a bit shortchanged, because of which the stock is under pressure. But don't forget, the stock has rallied significantly over the past 6 months. Back to you.
The minority shareholders of Motherson Sumi are in a very good situation. They have a mirror image holding in the domestic wiring harness. So their share percentage or anything doesn't get diluted or anything of the sort. So the domestic, what the wiring harness business, which everybody imagines is the major backbone of Motherson, that remains the same. Plus they get another extra shares in the new, the Motherson Sumi, what we call the new co, or the new SAMIL as we call it. They get shares over there.
Well, let's turn our attention to an important national story then. Amid the ongoing US-China tensions, the Prime Minister has made a surprise visit to Ladakh to review the border. Parishit Luthra has been tracking the developments very, very closely. He's joining in to fill us in with the key highlights of this visit. Parishit, over to you.
Well, Rajnath Singh, the Defence Minister, was supposed to visit Ladakh today. All arrangements had been made for that. But at the last moment yesterday, the visit was cancelled. And now there was a surprise visit from the Prime Minister. He reached Ladakh early this morning. He is visiting forward locations in the Nimu area. This is located at 11,000 feet, and it is among the toughest terrains, surrounded by the Zanskar range on the banks of the Indus as well. He is accompanied by the Chief of Defence Staff, Bipin Rawat, and also the Army Chief, General Naravne. He is interacting with top officials of the Army, Air Force, ITBP. He is there to raise the morale of the troops as well, and possibly this is a message to China as well. Now, when the Prime Minister returns, he would be holding meetings with his top cabinet ministers. This could be the External Affairs Minister, the Defence Minister Rajnath Singh, also the Home Minister Amit Shah, and there could possibly be a meeting with the Finance Minister and the NSA as well. There will be a formal statement from the Prime Minister's office once this visit concludes later this afternoon.
Okay, all right. Thanks so much for that, Parikshit. Well, let's move on. Let's move on to the latest in the delays in shipments from China. We now understand from sources that the Chinese origin imports are getting cleared. Alisha Sachdev, she joins us to give us a quick update on that front. Alisha, over to you.
Well, some steps in the forward direction now for Chinese origin consignments, which were stuck at ports for the last 10 days or so now. Our sources say that the clearance process for these shipments has been initiated from the 1st of July. We learned that the bills of entry for a large number of these consignments are now being generated, and slowly the assessment process, which was not taking place for the last week, has now been starting up slowly as well. In fact, the ICEA, which is the India Cellular and Electronics Association, and also FIO, which is the industry body for the import-export trade, has said that most consignments now are in the process of being cleared, so definitely some relief there. In fact, the National Association for Container Freight Stations has also said that the delivery of consignments which were held back at CFSs is now also taking place, and that's also resumed. However, this does not mean that the worries for importers are over yet, as they are likely to be confronted with more delays resulting from other factors such as the shortage of labor, and also the general extended timelines at ports because of them being choked up due to backlog and congestion. So this is the situation at the moment. Definitely a few forward steps, but delays are likely to continue.
Okay, thanks so much for that, Alisha. Well, on the other hand, West Bengal has blocked imports from Bangladesh And in retaliation, Bangladesh has stopped accepting Indian imports. Timsi joins us to tell us what she's picking up now from her sources. Timsi?
Well, as you rightly said, after seeing enough tensions when it comes to the import consignments from China, now a fresh issue has emerged on the India-Bangladesh land border. Very clearly what sources are indicating is that the West Bengal government has issued informal orders to restrict entry of import consignments coming from Bangladesh over COVID scare. And this particular situation is visible at the Benapole and Bhomra ports, the two land ports that India shares with Bangladesh. Also, both these land ports are affected, but when it comes to the air and sea route, they remain unimpacted. When we also checked with a lot of exporters, a lot of custom officials at these land ports, they said that earlier also this situation had emerged. We have a copy of a letter by Home Secretary who had written, Union Home Secretary Ajay Bhalla had written to West Bengal Chief Secretary on 5th of May saying that the Indo-Bangladesh border should not stop accepting imports and exports from India, Bangladesh at both the sides, and they should further be expedited. And again, this situation has emerged. What we are also picking up, that central government is in talks with Bangladesh government and West Bengal government to see how this can be best expedited as of today. But when you see what is the impact, well, yes, 60% of EXIM trade between India and Bangladesh happens through these two land borders. And FIO DG Ajay Sahai has told CNBC TV18 that in retaliation, Bangladesh has also stopped accepting our exports to the country from 1st July. Bangladesh government is likely to raise this issue again, and in the meantime they want Indian government to be ready with SOPs, especially when it comes to the state government. So let's see how soon state expedites and eases the restrictions, because this is actually impacting a lot of sectors when it comes to petroleum, when it comes to perishables, when it comes to other sectors like agri, textile, pharma, etc. Let's see how soon expedition of import-export trade at land borders with India, Bangladesh.
Absolutely, Timsi. Thanks so much for joining in and filling us in with those details. Well, on that note, we'll slip into a short break. On the other side, HDFC Life and Vedanta, they are reacting to the rejig in the Nifty 50. More details when we return.